Hello, chart watchers, and welcome to this Friday, August 30th, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonagle. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, a little bit of volatility today. We opened higher, pulled back, went into negative territory. Now the market's trying to recover back a little bit. Currently, the Dow Jones Industrial Average up 15 points, the S&P 500 down 1.5, the NASDAQ down 27, Russell 2000 down 2. 10-year Treasury yield up just slightly, 1.52%. Volatility index was down earlier, trying to rebound. Bulls hoping that this slide to the downside continues that we've seen throughout August. Materials leading to the upside today. Industrials also having a strong day. Discretionary kind of watching today because we actually closed yesterday on the XLY at the highest level in August, which was a nice breakout in an aggressive part of the market. But today, don't know if that's going to be a bearish engulfing candle and failure, or maybe we'll recover and post a new high later today, but discretionary will be worth watching. Communication services also gapping up, pulling back, and one of the laggards today. Specialty retail getting hit. Ulta, as you can see over here on the chart, Ulta Beauty really getting hit hard today. They did miss on their top and bottom lines yesterday. They lowered their guidance. And you can see market not really expecting that. That was a huge move down, tremendous volume, and that is weighing on the specialty retail group. Software trying to make the breakout, but staying contained within this August trading range. We'll see whether or not we can recover later today, but so far, not looking like a very good candle there in the short term for software. Insurance brokers, bright spot today, breaking out to an August high, taking out the tops that we saw back in mid-August. And then finally, one solid piece of earnings news certainly coming out of Ambarella today, AMBA. Really nice report, top and bottom line, raising guidance. And you can see the stock up quite a bit today. I think it's probably up about 17% or so. All right, Mary Ellen, it's Friday. There's a lot of what's hot and a lot of what's not. This market's been crazy in August. How are you doing with this market?
Yeah, the volatility has certainly picked up considerably, and really, I got a bit defensive, and it's working out as far as those higher yielding stocks. Not only defensive, but they're offering nice high yields. So that's been a bit of a counterbalance, but a bit concerned with this softening in the software stocks.
Yeah, and I've got 3 portfolios that I come up with well, it's every 3 months. I put 10 equal weighted stocks in each of the 3 portfolios, and the income portfolio that I have is kind of what you're talking about, more defensive, higher yielding, doesn't carry the same volatility, and it definitely weathers these moves back and forth better. It's not, in an up market, it's not going to do as well as, say, an aggressive portfolio, but it does help to weather the storm a little bit better for those who don't like all this volatility and the associated risk involved. So I agree. I mean, that's been definitely the better way to play it. And I mentioned on the show yesterday, August seasonality, I went back and showed how a couple of defensive areas, but one notably, consumer staples, tends to outperform the S&P 500 in the months of August and September. And it's because those are the 2 months where we do tend to see weakness in the market, more volatility, and some of those defensive names certainly help out in a portfolio. So your point, certainly very well taken. Yeah. So I'm hoping that September gives us a little bit of a directional clue, one way or the other. I mean, these moves back and forth, and I'll show a chart in a minute on the S&P 500, but it's almost dizzying back and forth, these 3-4% moves multiple times, like 6 times in the month of August that we've seen this.
Yeah, the volatility is just quite big, and September's not usually that great either.
Yeah.
So we'll see.
Yeah, I agree. All right, what do we got coming up later? Well, I guess next week, and then what are we doing today?
Yeah, so we have a nice long weekend here. The markets are closed on Monday. Tuesday, David Keller and Julius de Kempenaar will be filling in. And then as far as guests, Linda Raschke will be in next week, and then Bruce Frazier as well. So looks like a good week. And of course, today we are going to be taking a look at what is hot and what is not. 10 and 10, go ahead and get your ticker symbols in. Tom's going to be reviewing those stocks for us.
Yeah, and we got
So,
Western Digital we're going to start off with. So if anybody wants to look at that chart and see if you agree with me when I annotate that one, feel free. But let's go ahead and jump into the action today. We did have some economic reports out today, so we'll pull those up, take a look at those. And you can see personal income came in below expectations, but one thing that's certainly been holding up the market and it's given a lot of credit for holding up GDP has been spending, consumer spending, personal spending. And it was better than expected for July, rising 0.6% instead of 0.5. August Chicago PMI came in better than expected. That was at 9:45 this morning, Eastern Standard, 50.4 versus 47.5. But then August consumer sentiment fell 89.8 versus 92.3, and that was the lowest reading since October 2016. I'll show you that on a chart in just a minute. But first, I want to take a look at the 10-year Treasury yield and what's been going on there. I thought I'd take a look at it a little differently than I have in the past. This is a weekly chart going back the last 10 years, so throughout the bull market. And this is that steep drop that, of course, we're all aware of. And down at the bottom here, I changed out the RSI and I put a rate of change, which takes a look at it over the last 12 weeks. It's a weekly chart, and the rate of change is 12. And you can see that over the last 12 weeks, the rate of change in the yield has hit a level that we really had not seen since 2011. So if you're just kind of keeping a scorecard on how crazy and how fast these yields have moved down, we haven't seen anything like this in 8 years. So continue to follow that very closely. And of course, a lot point to the possible recession and the slowdown in economic growth. Others are saying, well, money's rotating in here because where else are you going to park your money for 10 years? The U.S. has positive yield. Most places around the country are negative. So there's an argument there that it's just simply where a lot of money is finding a home. Taking a look at some of the earnings news. We did have some big ones out. Workday, that was a pretty good report where they came out. They did beat on their bottom line. I thought overall, when you look at everything, considering their revenue, earnings, their guidance, I thought it all looked pretty good. They had a beat on their top line. As you can see, beat on the bottom line. They guided their full year subscription revenue higher. It was just slightly higher, but it was higher. Going down the list there, you look at Alta, maybe it doesn't look so bad on the surface there, just a mere 3-cent miss. And then on the top line, they missed by, they came in with revenues 1.67 billion. The market was expecting 1.68 billion. So you think, well, that doesn't really justify anything. But you have to keep in mind, a lot of these companies are based on growth, their projections of growth. And when they start lowering their guidance, and Alta did lower its guidance pretty significantly, that is what's going to drive those big drops. But then there toward the bottom, you can see Ambarella, huge beat on their bottom line, 21 cents versus 3. They also had a nice beat on their top line, and they guided their next quarter revenues higher as well. Campbell Soup, nice report. They beat on the revenues. They beat on their earnings per share, and that is one of those defensive companies I think that Mary Ellen was referring to that having a pretty good day and been doing pretty well. All right, let's take a look at some of these charts. Before I get into the some of the earnings, I did want to just point out that on StockCharts, you can chart the University of Michigan consumer sentiment. And this is what I was talking about earlier, where it came out at 89.2 or whatever it was, came in below expectations. And here was the last time we saw a reading this low, all the way back in 2016. The thing I wanted to point out here is it is a sentiment reading. So a lot of times when you get the sentiment, this is a household survey. I think they survey 600 households, asking them what they think of the economy. Well, with all the trade war news and the headlines and everything, of course, folks aren't feeling very good about things right now. Everybody's talking about the inverted yield curve and the possible recession. So we're starting to see that impact the sentiment. And when you look back, you can see big drops in sentiment, especially when you come down close to a key support area. A lot of times that is when the stock market starts to take a move back to the upside. You can see it happen back in 2016 when we pulled back. That's right before we had that huge move in the S&P to the upside. And here we are pulling back again to a 3-year low. The S&P 500 is not that far from an all-time high. I think we want to watch this short-term trading range. And this is what we were talking about a little bit earlier, where we've had throughout August these 3 to 4% moves back and forth. No real conviction in one direction or the other. I've highlighted here an area I'm watching closely today, right at about that 20-hour EMA, 29.10 or so. That's also right about where we gapped higher yesterday morning. So this is an area that I think we want to keep a very close eye on. The hourly PPO looks good. So that's a level I really want to try to pay attention to and hold. Did want to mention Alta with the huge move to the downside. This is a relative chart. And I'll be honest, I was a little surprised with this one. We talked about this, had a poll yesterday. I actually thought Alta, now the poll was which of the stocks would perform best in September. So that hasn't started yet, but I have to tell you, I was not expecting this kind of a report out of Alta. I thought on a relative basis, it was performing pretty well relative to the specialty retail group. Now, the specialty retail group has been under a lot of pressure, but if there was one stock out there maybe that could have helped, I thought it would be Alta, and yet we did not see that. They also talked about headwinds going forward in terms of these specialty retailers, the sales headwinds. There are a lot of them out there, and so they were lowering guidance. I don't know. It just doesn't look very good here. Even after the huge gap down, continuing to move lower, and you can see massive volume. We want to be real careful here. All right, going back to the homepage just very quickly, you can see under the large cap stocks over here, Lam Research jumping with its scooter rank right here, getting back close to 90. I think the stock looks really healthy. Nice uptrend in play, not far from a breakout. And you can see semiconductors nowhere near their breakout. So on a relative basis, Lam Research doing very well, breaking to new 52-week highs versus both the semiconductor group and the S&P 500. So for that reason, it is your scooter mover of the day.
All righty. Let's go ahead and actually that Lam Research does look good. We're going to be looking at a couple of other semiconductors later. But for now, we're going to go ahead and look at some of these upgrades and downgrades. There were a fair number of upgrades, I have to say today, but a lot of these are going to be after earnings. This is Abercrombie and Fitch, ANF. Not a pretty chart, but the stock came out with numbers yesterday, dropped 15%. Analysts perhaps thought that was a bit overdone. They upgraded it. It's bouncing about 3% today, but not a stock that I would consider. We can also look at another company, MRVL. This is one of the semiconductors. Let's just take a quick look here, because this particular stock, we can see that they also came out with numbers, but not anything too dramatic here. The stock was upgraded today and not a bit of a bounce at all. It's actually down on the day, finding resistance at these simple moving averages. The RSI here is negative, as is the MACD. Certainly better candidates out there. Let's take a look at Workday, WDAY, and this is also going to be earnings related. The stock dropped on their numbers. Upgrade not helping the stock at all. It's down almost 7% on the day. We can see that really this RSI has been negative for quite some time, taking us back to the beginning of August. Since this deteriorating, the stock breaks that 50-day. Now we've broken that 200-day simple moving average. So all bets are off as far as potential turnarounds. MACD is negative as well. Let's take a quick look at one last stock on the upgrade side, and ticker symbol DD. This is DuPont, another stock that really is down and out overall. Today's upgrade, we can see it's bouncing 3%, but generally this downtrend is firmly in place. Your simple moving average is heading downward, RSI, MACD in negative territory. So that is it for the upgrades. Only a few on the downgrade side. We won't review Ulta, but about 5 analysts are downgrading the stock after they came out with their numbers today. But another stock, 2 bank stocks got downgraded. TD, Canadian, this is Toronto Dominion Bank. We can see the stock overall with a number of these financials, with the yield curve potentially inverting, a lot of the profit margins diminishing. We can see that the RSI MACD is negative. Stock is below all of these simple moving averages, so it is going to have work to do at some point to potentially turn around. Last name, and this is on the downgrade side, is UBS. And the stock really, the company has been in trouble for quite some time. And we can go back to a year ago where this downtrend really began, but it is continuing. So that is it for the upgrades and downgrades. We will be right back after this brief break. Welcome back. We are going to jump right into what's hot and what's not. So let's go ahead and get started. Take a look at some of these stocks. We've seen a number of names in consumer discretionary. Tom talked about that earlier as far as the group overall turning positive prior to a bit of deterioration today. This first stock that we are looking at in the retail space is Dollar General, DG. Take a look at that big gap up yesterday on strong numbers, not really giving much back today, only down 0.5 percentage point, and that is really quite bullish. You like to see this big volume on these gaps up, and that is going to give it the oomph to really either retain this gap up and potentially move higher. The stock has a history of gapping up on earnings. This is this prior quarter, gapped up here. Take a look at the nice subsequent advance. Stock finding support at that upward trending 10-day simple moving average. Of course, the broader markets were a bit healthier at that point, but that would be an ideal outcome or scenario. Another stock that was up a lot this week is Costco, COST. And this is another company that came out with numbers. When you see these stocks that are having these big advances on strong earnings and they occur on volume combined with a breakout of a base, that is really a triple combination that can be quite powerful as far as, again, leading to more upside. We can see that the RSI and the MACD are both in positive territory. And Costco, it's in line with a number of these big box stores that are coming in, Home Depot, Lowe's, to name a few. Here's a smaller name in the consumer discretionary, Tilly's, and they are a retailer to the teen space. Nice gap up here again, big volume. The beauty here is the stock has now broken up above this 200-day simple moving average. And this is with an eye toward pulling up these shorter term simple moving averages so that if we get a break up above that, that would be indicating a golden cross shift in sentiment, positive. And really, we have a lot of room to grow here or to go higher. You don't have a lot in the way of resistance. So it'll be interesting. You're going to want to look for analysts raising estimates higher for that one to potentially continue that advance. Take a look here at Big Lots, BIG. Now, here's a company, again, going back to September, has been in a significant downtrend, and the stock really is going to have quite a bit of work to do to potentially reverse this downtrend. We can see that given the nice numbers, the stock did break potentially above that 50-day simple moving average, but it is poised to close below that. So if this acts as continued resistance, it's going to be tough for Big Lots to potentially reverse the downtrend. Burlington, big winner. I'm sure it was covered on MarketWatchers Live yesterday on this big gap up, huge volume. And again, another one where the gains really are not giving up a lot. It's down about 1%, but considering that the stock was up quite a bit yesterday, that is quite constructive, big volume, but certainly you would expect some sort of a pullback. The stock is overbought when the RSI gets up there above 70. You can go back historically and see that that can be a signal of, at the very least, a bit of a pullback. We can take a look at one other in the retail space that is enjoying a good week, and that is let's see if I can pull this up, and it is Boot Barn. And the beauty here is it's not really earnings related, but the stock is forming the right side of this base. I'm not sure of this anomaly, but ideally, if we can see this stock break out here at 37, that would be really quite constructive. The RSI is trending upward and positive. MACD. Also, we had that nice black line up through the red, and it is up here above that net neutral. So, Tom, I'm going to pass the baton over to you.
All right, sounds good. Tell you what, I'm going to take a look at the industrials here. This is a group that's been pretty strong. First, we'll take a look at just the absolute chart of the XLI. And you can see back on today's Friday, so that would have been on Wednesday here, as we were hitting this support level. I wrote about this in my blog, the fact that transports put in a really nice reversing candle right at support. And not only have we bounced back up, but we have gotten through the 20-day moving average, which had been a problem for this group for the last 30 days or so. But the first reaction high was right around 76. You can see the 50-day moving average. So we still have a little bit of work to do, but the industrials are starting to show some strength here. And I wanted to also point out, on a relative basis, this goes back the last 3 years, or excuse me, the last 2 years, on the industrials relative to the S&P 500. And this strength that we're starting to see is now testing a very significant trend line in 2019. So if we could get this breakout here, and you can see the relative PPO, which has been negative throughout much of the year, if that goes positive, we get this breakout, I think industrials is a group we want to continue to watch for potential trading opportunities. And there are some areas that I think we want to watch within the group. Now, here's delivery services. Now, I think you want to be careful. Some of these groups have been, buoyed a little bit by the trade war, the fact that things have kind of taken a turn for the better here of late. I don't know if that's sustainable. We'll have to wait to see. Of course, we're going to need a trade deal to really sustain some of these moves. But here you can see the delivery services group relative to the S&P. And yes, we're showing strength, but it's after being tremendously oversold in terms of the relative weakness that we had seen in this group. So I think we could just be getting a little bounce. Want to be careful here. Next up is the transportation services. Same thing. Huge move down starting in the fourth quarter of last year. Trying to get a little bit of a rebound, but I'm not so sold on this group just yet. I'm going to give you some individual stocks from these groups, but I just want you to look to see what's going on. To me, of the four industries within the industrials that I'm going to talk about, truckers to me is one starting to look pretty good. I love this move through the 20. Now we're getting the move through the 50. This is a 50-week SMA that truckers are now breaking above on a relative basis. You can see also we're trying to make this break into positive territory. I think this is probably the best of the four that I'm going to point out. The fourth one being heavy construction. Again, long-term downtrend, a little bit of uptrend in 2019, then breaking down again. Now we're rallying back. I don't know. Of the four, the truckers, I think, look most promising. Now let's take a look at a few stocks within these groups. FWRD, Forward Air. I'm going to use this in a relative chart, so let's pull that up. You can see the stock having a really nice week. Just the last few days, big move. Not a huge volume stock, though. Probably have my attention. When I look at it, I just don't see a whole lot. Stock relative to its peers has been downtrending for 4 or 5 months. I don't know. That one might probably be a little nervous. The one I would be interested in if I was in any of these would be UPS. UPS, huge volume with their earnings, big move up, 3 white soldiers, consolidating, I think a break above 120. The fact that we're even getting ready to break out, I think is a really strong signal. Look at the relative strength here. UPS would be my choice in the group. Among the transportation, XPO, and I saw that the relative, the scooter rank was 95 on this stock. And this was one of the things I talked about a couple of days ago, I think. This has been in a long-term downtrend. It's simply sideways consolidating. The scooter, keep in mind, only looks at about the last 5 months on the chart. So, yes, it has a nice scooter rank. I'm not so overly sold on this. Tremendous distribution on the way down. I think it's still got some work to do. I'd be a little careful there. As far as the truckers go, JB Hunt, JBHT, I think this is one that's starting to look really good. Great move here with earnings. Pulled back, held on to gap support, and now breaking out again. Look at the relative strength here versus the truckers. It's now at a 6-month high. If the truckers continue to do well and we get that relative breakout on the industrials, I think this is an area you want to keep an eye on, and JBHT has been a good performer. Within the, let me pull up the CNHI. This is one that's in that construction vehicles area. And you can see here, actually, this was not in the construction vehicle. It is heavy construction. Sorry about that. Within heavy construction, you can see CNH having a really nice move here to the upside. Good volume coming in. This one also breaking to about a 9-month relative high versus its peers. Not a huge fan of the group, but if the group continues to advance on a relative basis, I think this is going to be a pretty good stock. So another stock very hot this week. What other hot stocks you got, Mary Ellen?
Yeah, I'm going to go ahead and share some names, but I really am pleased to see that the transports are potentially waking up and doing a bit better. That's always, if you're a believer in that Dow theory, that could be a positive signal there. Let's take a look at some of these semiconductor stocks. And I'm pulling up the semiconductor ETF, SOXX. Can't really see it here, but the semis are up about over 4% for the week. Now, bear in mind, they are going to be super sensitive to any trade war fears because many of these companies do derive their income from China, at least a portion. But there are definite bright spots among, and I will say it's a have or have not type of a group. Let's take a look at some of the stocks in there. First one, KLAC. We can look at this on the daily chart, and you'll see that this particular stock did break out here in mid-August and has continued upward, finding support at this upward trending 10-day simple moving average. That's your green line here. When you see a stock that's in a particular group and it's not getting hammered with the group, in other words, it's showing relative outperformance, that is a clear-cut signal of strength. We can see that the RSI during this entire August month has been up here above that 50. That's very constructive, as has the MACD. So that certainly is one name. Another one we can look at, ASML Holdings, and that is the ticker symbol. And this is a stock that this is very much in line, this action here in August with this stock. This is a number of semis have gone down even more. But what I like about this is it is now potentially forming the right side of the space. The stock has broken back above these simple moving averages. And we can see that this particular move over the last 2 days is pushing this RSI upward. And then also this MACD, this black line up through the red, poised to break up above that net neutral 0. So very constructive name among the semis. We can take a look at AMD. This is a bit of a bellwether name, Advanced Micro. Bit of a flatliner as well, not as interesting as the other names that we've been reviewing here. We can see that it is finding resistance at this flat 50-day simple moving average. RSI not quite breaking back up here, and your MACD is flat as well. One last name, Intel, even more of a bellwether type of a stock. This stock is having a good week. It's up over 5%, but overall, it is not an outperformer, not a stock I would look to. They've had issues as far as their chip demand is failing. We can see the RSI or the is just poised to break up above this 50. MACD has a nice crossover, but it is still below. So not the best name among semis. And then we can take one quick look because restaurant stocks are having a good week. And I wrote an article about this on Monday's articles in StockCharts.com. And take a look at Wendy's. This is a prime example. They came out here with good numbers in the beginning of August. They're finding great traction with a new product. For them, it's chicken. They're renowned for their square burgers. But take a look after this earnings gap up. The stock consolidated a bit, but has really taken off. Analysts have fallen in love. They're raising estimates. Stock is finding support at this upward trending 10-day simple moving average. And then one other name in this space is Chipotle, CMG. And this is another one. They came out earlier this week, announced a new menu item. I believe it's a carne asada. But more importantly, technically, the stock is finding support at this upward trending 10-day. RSI and your MACD are in positive territory. So that's it for what's hot. I'm going to go ahead in and take a look at what's not. The broader markets, the S&P is up about 2.5% for the week. But and with that, most of the areas of the broader markets have been participating, but there are some areas that are getting hit. So the first one that we can certainly take a look at are some of these tobacco stocks. I'm going to pull up Philip Morris, and we can see that this stock really has been getting hit. The company is really close to engineering they are merging with Altria. We're going to take a look at that stock as well. But this breakdown here, actually Altria, let's take a look at MO. Again, these two companies are going to be merging, but there was a investigation out that was announced earlier this week where the Juul vaping pen is under investigation, and in particular because there's a feeling that they are advertising to a younger audience, and that really is getting this particular stock, as well as Philip Morris, is getting hit. VGR is another stock that is in this tobacco space. They had been looking to do really quite well. The stock broke out of this space, but this week it is getting hit in line with that particular market. Let's take a look at another area that there are I didn't really talk about it, but I thought about it, how this is getting softening. This is the software ETF IGV as an example. This area had been a huge outperformer, and this is taking us out of that bear market at the beginning of this year. Faltered a bit with that May correction, but then came on really quite strongly. This area, the software stocks got hit with the broader markets here. Take a look at this volatility, and really a number of these stocks have not been able to get off the mat and regain this prior glory. Let's go ahead and take a look at a couple of the names within software that are not doing particularly well this week. This is Splunk, and we can see that it had been in a downtrend prior to coming out with earnings this week. The company announced that they are purchasing another company for over $1 billion. They are going to be issuing new shares in order to fund that purchase. Analysts are not pleased. Stock gaps down. Huge volume. Your RSI and MACD are negative. Downtrend seems very firmly in place. Let's take a look at CyberArk, CYBR. This company came out with earnings about a month ago. This is that drop here on earnings. Analysts are continuing to revise estimates lower. So we can see again another software name that this is in line with the group, but now it is finding further deterioration. RSI, MACD negative on both fronts. We can look at TEAM. This is a software stock that had been a big winner. We can see during this whole period here, really ignored that May correction, held in really quite well, but it is getting hit this week. Stocks down over 5%. We can see it's breaking below that 50-day simple moving average. Big pickup here in the volume, not what you want to see. The stock is under distribution. RSI, MACD just poised to turn negative there. And we can look at one last software stock, and that is Zscaler, another big winner year to date coming into this August period. The stock is due to report their earnings in a couple of weeks, but when you see this type of break, I'm taking you back about 2 weeks ago, big volume. So here we have the stock breaking below this 50-day simple moving average. Your shorter term 10-day crosses down below that 50-day. That is a death cross. The upward momentum has potentially ended, and sure enough, the stock is now finding upward resistance at that 10-day, an area which had been support. We can see the RSI as well as the MACD trending negatively, so not what you want to see. One other name that we can look at here in the software space is Slack. Ticker symbol is WORK. This is a new issue. Bit hard to see here, but the stock is down. Let me see if I can pull up a weekly to get a bit more, and that is not going to help, but the stock is in a downtrend and not doing particularly well. Tom, I'm going to ask just hear what you're seeing on the not hot side.
Yeah, it's a little bit more challenging, I think, to find those this week because the market mostly higher. I just wanted to pull up the weekly, the 1 week summary of the sectors, and you can see everything's green. So, trying to find stocks or groups that are not hot, it's a little bit more of a challenge. But what I do is I follow my relative strength industry chart list. So I've got the industry groups, their relative strength. They're all versus the S&P 500. And when I put them into a chart list like this and I hit the view list as summary, it will bring them up. And then I simply click by the percentage change so I can see what's actually outperforming this week, which is some of the groups that Mary Ellen and I talked about. And then if you click here, you see, okay, this is what's underperforming. And Mary Ellen did talk about those tobacco stocks. They've been a big, big underperformer this week. I'm going to look at the mortgage REITs along with the insurance, this insurance group, renewable energy. Definitely a couple of key stocks in that area which have been on fire in 2019, actually having rough weeks this week, one in particular, Enphase Energy. And then down here, you can see telecommunications equipment, and they're up for the week, but they're down versus the S&P 500. So I thought I'd take a look at those. Just looking at the charts of the groups, you can see, first of all, the full line insurance group. This is the DJUSIF. We are right at a pretty important support level in the near term. This 49.5 area was support before we put in the double top. So we want to watch this level to the downside. If we break down, that would not be a very good thing. As far as the stock in the group, let's pull up AIG, which is American International Group, and you can see very similar. We're trying to make this breakdown. Hopefully it reverses and holds, but we've been failing at that 20-day moving average. So I think AIG certainly one to keep an eye on. Next group up is, let's see if we can get it going here. Here we go. Mortgage REITs, DJUSMR. Downtrend's been steady throughout the entire month. So the mortgage REIT's not been doing well. Today getting a little bit of a bounce, but you can see it's been a very, very rough week for this group. As far as individual stocks here, Annaly Mortgage, NLY, Annaly Capital Management, I should say. Big move down in August, continuing to drift lower. We're getting a little bounce here, but this is an ugly looking chart, one that I certainly would be staying away from, especially after breaking below the May low. Another stock within the space, AGNC. This is AGNC Investment. Another huge move to the downside. Yes, a little bit of recovery today, but this has not been a good performing stock this week for sure. Going back over here, we'll take a step ahead one more time. And this will be telecommunications equipment. So yes, we're up a little bit when we look at where we were at the end of last week, August 23rd. But on a relative basis, we're not doing well. When I look at this chart, a lot of these companies and industry groups and sectors, we're seeing bounces back to test those highs from earlier in August. We're not seeing that at all here on the telecommunications group. We're still much closer to the lows. So I think when we're talking about weakness, we've got to talk about these telecom stocks. One in particular that's got my eye is Ericsson, ERIC. Ericsson continuing to downtrend. Look at the failure at the 20-day moving average just a couple of weeks ago, continuing to move lower. This was a stock I liked several months ago, 3, 4, 5 months ago. And I think if we pull this one up on a relative chart, you probably would see why. This huge move up back in April and May. You can see that the group was doing much better back then than it is now. Look, we've broken down now to multi-month lows. And look at the relative strength here. 52-week low, telecommunications equipment versus the S&P 500. So when you've got a stock that's underperforming its peers and you've got the peers underperforming the S&P, not a good area to be in. And then finally, I mentioned the renewable energy. Let me just pull up a chart here, take a look at one stock. But here is renewable energy. Now, this is a much better looking chart. Clearly in an uptrend. I think as long as we hold those lows in mid-August, I think this is a group you want to continue to consider. But it's having a rough week on a relative basis. It is about flat for the week, but that is not the case for one of its component stocks, Enphase Energy, ENPH. I love the stock, but it is really struggling. It's having a rough week. It was trading earlier this week up around 35. Now it's 29.09. I would be watching this gap support area right here, or a big reversal on that 20-day moving average would be bullish. But if it continues, it's a very volatile stock. I think it's possibly going to go back down to test this area around 26.5. All right, Mary Ellen, you get the last 5 minutes. What else were you seeing not hot?
Yeah, so it's my turn to dig up some areas that are not participating in this week's rally. And the area I'm going to touch on here is healthcare. We're looking at EHTH. This is a insurance healthcare broker. But what we can see is the stock had been in really quite a significant uptrend. It was up 165% year to date. Prior to this week's deterioration, I really couldn't find any news, whether it was profit taking, but we can see this slow drop here, this RSI, MACD trending negatively now. A little bit of a pickup here on the volume, so there's definitely sellers out there. The stock is slowly breaking below first this 10-day, now breaking down below that 50, this 10-day poised to break below the 50. We talked about that death cross indicating that this upward momentum is potentially deteriorating and certainly potentially ending. That was one name.
Mary Ellen.
Yes. Hi.
Yeah, I wanted to touch base on that one as well because I traded this stock earlier this week and took a loss, got stopped out of it because I was thinking, right around that 94 50-day moving average. I thought that might be an area where we would see a nice reversal. Never happened. We closed down. And what really bothers me about this stock is it's been a tremendous relative performer in the life insurance space. But the last 2 days, we saw the 10-year Treasury yield move up. We saw life insurance bounce. And this stock continued going down. And as you mentioned, on increasing volume. I don't know what's going on here, but if it doesn't hold that gap support around 85 by today's close, I think this is one you want to be really careful with. Something's going on and the volume's picking up. And like you said, I didn't see any news either, so I'm not sure what's happening there.
Yeah, that's a good call because I know this is one that you have actively participated in on the upside, and particularly this gap up, I remember distinctly, and it was very surprised to see it not having a good week. And oftentimes this could be just one big institution that wants out. They want to put their money to work elsewhere, and once that selling is done, we could see a stop to this deterioration. Let's take a look at a couple of other healthcare names that are struggling a bit. It's been a tough area in healthcare overall this year. Humana is another stock that is in this healthcare insurance space. And we can see that it had this huge gap down earlier in the week on volume, and the stock is trying to negate that. So we would call this a hemorrhage with a wedge. It would have to break above this 10-day in order to resume this uptrend that it had during that July into mid-August period. Your RSI just poised to break up above that net neutral 50, and then also your MACD poised to turn. So we'll keep an eye on that one. Another one that is down within healthcare this week is ALXN. Let's take a look if I can get the ticker symbol up here. And this is a company that had very poor news today. The stock's gapping down 11%. Amgen is, there is a drug that Amgen is challenging the patent on, and Alexion is really going to suffer as a result. The stock really was not that healthy looking going into today's poor news. This type of drop tells you someone knew that today's news potentially was coming out, but lots of big volume on the downside. The RSI, MACD are quite negative there. We can take a quick look at some of these energy stocks. I'm going to start out by showing you the energy group graph. It's up about 2+%, but that's really in line with the S&P, not outperforming like some of these other areas. So this downtrend very firmly in place. I think we have time for a couple of names here. So this is Schlumberger, and we can see among energy, this stock really has been in a deteriorating phase. We can go back to last August when this particular stock first broke below all of these simple moving averages. And this is the kind of thing you want to be on the lookout for, because once these simple moving averages start to decline, that is really a sign that the stock has more downside ahead, because any kind of rally attempts are being met with resistance at these simple moving averages. So really very much in a confirmed downtrend. VLO, this is another one that really has not done well, similarly to a lot of these energy names. So it was down certainly earlier in the week. It's trying to reverse but net, it is down about 2% for the week. So energy areas just really cannot get out of their own way. This is HFC, and I talked about these turnaround downtrend reversal attempts where they can easily be met with resistance. It very lightly touched and went above that 200-day before failing. When these longer term moving averages are in a downtrend, oftentimes you will find that resistance and then a drop away from that. And so that's it for what's hot and what's not.
All right, there are a lot of the areas we just talked about, and we're going to go ahead and jump into the 10 in 10. And I'm going to go ahead and start it off. First stock today is Western Digital. I actually like the stock. Off of this uptrend back in June and throughout most of July. Good volume trends. I think, we've been consolidating with much lighter volume over the past 30 days. But with the overall market pulling back significantly from its recent highs, you can see Western Digital sitting right near a breakout level. So on a relative basis, when I look back, first of all, computer hardware, this is an absolute basis. But if we get that breakout in its group, computer hardware, I think that would be one positive in its favor. Also, you can see relative to the computer hardware, it looks like right now we're trying to make a break to about a 5-6 month relative high. And we're not far from a 52-week relative high on Western Digital relative to its computer hardware space peers. Looking at the S&P, it's right near about a 10-11 month relative high. And then the computer hardware group relative to the S&P has been uptrending. So I don't think this is the best stock out there, but I certainly think that this is one that's been improving. I think looks better than the overall market. And I think a breakout and close above 58 on improving volume would be a very, very bullish signal.
Very good. The next one is KLAC.
Love this one. Really love this one. Breaking out in the semis with the semis nowhere near breakout. I mean, look at where the semis were in April, where KLA was. Look at where the semis were back at the end of July, where KLA was, breaking out when the group did not. Now look at it breaking out again 2 more times with the market down twice. This is clearly one of the best stocks in the semi space, and this is where you can see it visually on the chart. KLAC, $, DJUSSC, huge winner in the semi space. I love the way this chart looks. I think that the market is telling us something. This is the winner in the semiconductor area. And if semiconductors, we get past this trade war, semiconductors start moving, you've got probably the best stock, or certainly one of the best stocks in KLA Corp right now. So didn't annotate it, but let me just show you what I was looking at there. I think the breakout here was really important, not to mention the increasing volume through here as it just makes this push in July. Even when the market, is struggling, its peers are struggling, and yet KLA is breaking out again. I think that's very bullish.
All right. The next one is in that solar space that you were talking about earlier. It's ENPH.
Yeah, this is one I talked about. I didn't annotate it though, so I can go ahead and annotate it here. It's still one of the best performers in the space. Now, if you look at the last week, of course it's not. It's been a horrible week, but this is a volatile stock. It's an aggressive stock. Stock was $10 back at the beginning of May or just before that. So we got up to 35. It was a huge move. You're going to get folks jumping in at the top because they see how great the stock's been. And then all of a sudden it goes through a week like this and then panic sets in. If you buy it at 35, you're not going to be very happy with it at 29. But I do think you're going to see buyers jump back in here around 26.5 to 27.
Okay. Software stock, BOX, they came out with numbers earlier this week.
Yeah, I saw that their numbers were pretty good. I didn't remember seeing their guidance, but I thought they had beaten.
They
nice
did.
reaction. Did they beat?
Yeah, 150% above estimates. They're a smaller company, but yeah.
Yeah, this is looking a little bit like maybe an exhaustive gap to the downside. I mean, it's been under a lot of pressure to the downside. Would have thought maybe that's an exhaustive gap, but hindsight will tell you whether or not they're exhaustive gaps or not. We went up to the 20-day, a little bit through gap resistance and right back down again. But because we gapped down to a new low here and immediately came right back up through and set about a 3 or 4 week high, today we're getting back up above that 20-day moving average. Yeah, I think this one's starting to look better. Now, it's been an underperformer. So I always say if I'm in an underperformer and I'm going to take a chance because I think maybe it's bottomed, had some good numbers and so forth, I want to watch probably that 20-day moving average. I don't want to see it roll back over and start to trend lower like it did back in June. Once it went back below the 20, we never got back through. So I would probably just keep a tight stop. It's improving, probably still has some more work to do though.
All right, next one is a smaller name as well, 500 million market cap telecom, TNAV.
All right, TNAV. Telenav, wow, look at the volume coming in here. Another one's very aggressive. Keep that in mind. Anytime you get a company that's moved like this on this kind of volume, going from 3.5 to 11.5 since the beginning of the year, it's obviously one of the best performers in the market. A lot of good stuff going on. It's one of the best relative to the software group, and software has been strong. But these are the kinds of stocks that when they do move lower fast, like we were just talking about with ENPH. So I wouldn't be in it unless it was with aggressive money and understanding the risks involved. To the downside, if you're waiting, I mean, the big breakout occurred at 9.5. Could this stock go back $1.80? Yeah, I think it could. I don't know if it will, but if we're talking about reward to risk, the closer you get back down to that 50-day moving average and that 950 price support level, the better I'd like it.
Okay, next one is PayPal, PYPL.
Yeah, I'm interested. I haven't looked at this one in a while, but PayPal is one that had fallen apart on a relative basis to the financial administration software space. It's trying to get back up, but it had a pretty steep drop when I look at the relative strength. Coming back, but still overall, I think been moving lower for the last 2.5 months. I don't know. I'm not convinced here. I'd like to see it maybe get back up through its 50-day moving average. I don't like the reversal today after getting through that 110 area. So I would just be watching two things, I think, here with PayPal. Number one, can we get that close up above 110? And if we do, can we get through that 50-day moving average? Because that is a level I know you watch it very closely, Mary Ellen.
Yeah.
After this was a great stock as long as it was up above that 50. But now that it's below, it's a different change in character here, and we need to be a little careful. This also could be a downsloping neckline of a head and shoulder top, so we could be putting in the right shoulder. I don't like these downsloping necklines, because what that's telling us is that we didn't have support at this prior low over here. We actually had enough sellers that we could take below that level. So when you get a downsloping neckline like that, left shoulder, neckline, head, right side of the neckline, right shoulder. If this broke down below 102.50, I would really be careful with PayPal.
Yeah, I've been keeping an eye on that one. Next one is TTD.
Yeah, this is another software name. It's not doing as well as some of the others, but it was still holding up. I think it was down earlier today, I saw.
Mm-hmm.
Yeah, it's still trying to hang on around that 240 level where August, that's where the buyers seem to keep coming in. So I'd maybe watch that from a short-term trading perspective. That's where all those 240 tests have been coming in August and holding. We are down $5 today. Obviously, it's struggling. I think the prior low down around 225. I think from a longer-term perspective, 225 to 240 is an area I would watch. I think the overall relative strength is still there, even though we've come down a little bit the last few weeks. We just hit a 52-week high 3 weeks ago versus the software group. So I'm okay with it. That here was the earnings, the failure of the breakout on the earnings. Let's watch this support zone, make sure that holds.
Okay. Then we have Shake Shack, SHAK, big winner in here.
Yeah, I love Shake Shack. It's probably that one along with Starbucks and Chipotle are probably my three favorites in the restaurant area.
Mm-hmm.
Beautiful move up, great volume. Another one that, would certainly be easier to jump in if you get a little pullback. And I think I'm going to make this one really simple. I would just simply be looking for a 20-day test. If I get a 20-day test, I would be a buyer. So anything back down around the mid-90s, I think would be interesting on Shake Shack.
Very good. And then we have TLT.
All right, TLT, of course, with the yields continuing to fall, this has been a huge move up. Lots of money chasing the TLT. I think I could probably just do this on a regular chart. I think with TLT, we want to be a little careful. I think if you lose the 20-day moving average, that's also short-term support area right there. So we pulled back. We held that level just below 144, and you've got the 20-day sitting at 143.56. Higher high, black candle, which is a reversing candle, and a negative divergence. I'm a little nervous. I've said before, on the 10-year Treasury yield that we have a positive divergence. We could see a push back to the upside on the TNX, a drop on the TLT. That doesn't mean that I'm saying that, the ultimate bottom's in on the TNX or the ultimate top's in on the TLT. I just think momentum is starting to slow a little bit on this move to the upside. So I wouldn't be surprised to see a little bit more weakness in the TLT maybe over the next couple of weeks.
All right. And then the last one we have is SAP, a German software company.
Yeah, this is another one that I think came out with really good earnings previously. Maybe this was all the way back in April. July, we gapped down. Maybe that was the earnings. Did they miss? Do you have that?
Yeah, they did. That was July 18th.
Yeah. So I must be thinking about the huge beat that they had back in April, because this one looked really good for a while. And now when we pull it up on a relative chart, it's got to get back through the 20-day moving average. It's trying to hang on to price support, but on a relative basis, it's kind of fallen out of bed. But here was the breakout with the huge earnings I talked about back in April. We've essentially come all the way back down here and tested this. And now each of our bounces, you can see, struggling to get through this 20-day moving average. So I think we need to see a reversal there before I would start to get excited. No real volume coming in on these tests to the upside. So I don't know, a little nervous about this one. Don't like it sitting near 52-week relative low. So I personally would pass, look for something else in software.
All
and
right.
That is the 10 in 10, right?
Yeah, very good. Well done.
Yeah, so there you have on your screen the stocks that we just looked at. And, there was a question that came into the room, and be interested for your thoughts as well, Mary Ellen. But the question that came in from someone was asking me about the, why I would expect that the interest rates would be lower, because I'd say we're in a secular bull market, strong economy. Why would I feel like the Fed should lower rates since we're already at half what normal would be for low rates? And I think this comes down to a couple things, my thoughts here. Number one, the Federal Reserve has a mandate, one of which is to maximize employment. I think they're doing you can't argue there, low unemployment right now. One is to moderate long-term interest rates. I think they've done a pretty good job with that. And then the third one, which I think they're having problems with, is stabilizing prices. The reason I think that they should be lowering rates, number one, is because inflation is below their target rate and is showing no signs really of coming back up. The problem is when you have global central bankers lowering rates and the U.S. is slow to do so, it increases the value of the dollar. So with the dollar increasing, that puts downward pressure on commodities. If commodities stay in downtrends, and the CRB index has been tracking versus the S&P 500 has been downtrending for years. If that continues, that puts more downward pressure on inflation. Deflation or disinflation is a bigger threat to us than inflation. I think the Fed should be preemptive in lowering rates, which is what everyone else is doing around the world, to keep, hopefully maybe inflate commodity prices a little bit, to weaken the dollar. I think the strong dollar is a little bit of a problem right now. And also, I think it just makes sense with, with what's going on with the trade war and the inverted yield curve. I think all of those things are leaving the door open for the Fed to lower. I would like to see them lower 50 basis points at the September meeting. I don't know if you have any thoughts. You've got 30, 45 seconds.
No, I think you really encapsulated it and covered it really quite well. You got to that concept about the trade war. There's that whole theory out there that lowering rates would counterbalance the trade war and certainly the chaos that it's putting forth. So that certainly is a big consideration as well. But I agree with the lowering concept. I don't know about a half a point. That would certainly be very interesting.
Yeah, I think they will lower a quarter. I think they should lower a half. We'll see. Look at the 10-year Treasury yield. Look at the yields. The bond market is telling the Fed you're going to lower. Out in my mind, I think it's being.
You've been right on that all along.
Well, we shall see. I think they'll lower again, but they should do 50. Anyhow, I want to thank all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we will see you back here on Monday. Actually, on Tuesday. Monday closed. Markets closed. Happy trading.